Well, we had about 50 registrants for this event, and I'm glad to see that a lot of you are here. Welcome. My name is Steve Kempf. I'm with Land Trust Title Services, and it's our intention to host these events so that you, as a real estate broker or a real estate professional, if you're providing real estate law services, can just have an opportunity to sharpen your knowledge, sharpen your skills, be able to speak confidently about some things that people have a lot of different questions about. And one of them certainly that has been on the radar, I've seen it, it's been in a lot of the real estate, local organizations. There's been a lot of national conferences on it, is blockchain and crypto. And a book fell into my hands. I met our speaker on Twitter, and a book fell into my hands. I read the book. I was like, dang, that's the first time that I really understood, what was happening in a way that was kind of lower shelf, so I could talk to people about it and explain it and that kind of thing. And so I am really pleased that I met Danny Laylan and had a great conversation with him. And I thought, what a great thing it would be for us to be able to bring him to our agent and attorney partner community, have him speak on the subject of the blockchain and its effect on the real estate industry, and then be able to provide you with a book that Danny has written called The 7 Simple Steps to Get Started in Crypto. And we're not advocating at all that anyone get started in crypto. I just want to be clear about that. It's not financial advice. This is just our effort to just provide value to the agent community. So welcome. I want to recognize, before we begin, I want to recognize really what I would say is the best sales group in the industry, in the title industry. And I see we have Andrew Rudich on the call with us. We have Carmen Carbonara. We have Candace Liebner up in Wisconsin. We have Denise Hellstrom, Dom Floro, Anya Poulet. And so thank you to our great sales team. And I just want to tip the hat to them. Also, just a little housekeeping. If you have a question, please just drop it in the chat while Danny's presenting. And I will, I will interrupt Danny. And, we want this to be, somewhat conversational from a standpoint that if there's a question that comes to mind, no question is off limits. So please ask it. So with that, I want to introduce Danny. Danny Laylan is a real estate investor, a former Marine officer. He's a B2B software sales executive, and he's an independent blockchain consultant. And we're so pleased to have him. He's been actively researching and investing in crypto since 2017 and focuses primarily on simplifying the complex crypto and blockchain landscape for value and growth investors. So, you might have an investor that says, hey, can I buy real estate with crypto? How is blockchain going to impact my career as a real estate professional? These kind of things are some of the questions that we're going to hope to provide some answer to as we get going. So without further ado, let me bring on Danny. And Danny, welcome and thank you for being here.
Steve, thanks so much for that kind intro, and thank you all for joining this morning on a topic that is definitely shrouded in controversy and lots of sort of bad media coverage, and I don't want to call it fake news, but there's a lot about crypto that people don't understand. So I'm happy that we're all here to just kind of talk about it. Today's sort of presentation, I'm going to focus a little bit up front on just the fundamentals, right? I want to help people understand what is blockchain, what is the technology that makes crypto work, and then what are specifically smart contracts. These are a bunch of buzzwords that I'm sure you guys have been exposed to, but I'm doubting anyone's taken the time to actually walk you through and try to make a light bulb moment or two on how the actual network technology functions. So we're going to cover that first. And after we establish a firm foundation there, we can then move on to, okay, what are the actual industry applications for real estate, for what you guys are interested in? I'm going to run you through a few of the present solutions out there that people are already using, and then we'll get into It kind of turns into a little bit of speculation, but we can kind of then talk about where could it potentially go. And then we'll have some Q&A at the end. Steve, as questions roll in, please feel free to interrupt me. I'd love to handle those as they come up. But without further ado, I'll give you a brief intro on myself, and then we'll roll right into it. So me, as Steve mentioned, I'm an investor. I've been involved in real estate, stock market, crypto, investing in small businesses, etc. for a number of years. I've been in crypto specifically since 2017. So I'm by no means what you would call an OG in crypto, right? I haven't been around since 2012. I didn't really see the use case for blockchain when I first came across it back then in 2012. And it took me until 5 years later, 2017, to revisit the subject with more of an open mind. But it's something that I've been falling down the rabbit hole on, so to speak, for the last 5 years or so. I'm originally from Wisconsin, so all of you Chicago folk in the crowd, I went to Marquette University for college. I was born and raised in a small town in sort of central Wisconsin. Most of my friends are from Chicago. So I'd like to think I'm among sort of friends in this environment and not Packer haters and Wisconsin haters, but we'll sprint past that and go right into the professional life.
Yeah, that was the first question. Actually, try to establish credibility. Is, are you a Packer fan? And
yeah, well, my political answer is I don't really watch sports as much anymore.
There you go.
I was born and raised a Packer fan, but
right.
I don't even have cable anymore. So there's that.
We like that.
And professionally, just credibility wise, right? I started my professional career as a Marine Corps officer. I was an aviation maintenance officer for a number of years. I left the Corps as a captain in 2018 and transitioned into technology sales, primarily engineering software sales. And then from there, about a year and a half ago, I moved into starting my own crypto consulting and coaching firm, basically. It's a one-man shop. I'm a solopreneur, but it's been really a fun experiment for me. There's a kind of a common theme here in all of my professional experience, and that is something Steve kind of alluded to, is simplifying complexity, right? Constantly simplifying a complex technical environment with helicopters and drones in the Marine Corps for our executive leadership, and then simplifying, physics software, really like selling software to rocket scientists, literally in most cases. And now simplifying the complex environment that is crypto and blockchain into something that makes sense for beginners and value and growth investors. So common theme, I like to try to create light bulb moments for people and things that typically are just a little too dense. So hopefully that experience can come across today and create a couple of light bulb moments for someone on this call. And if that happens, then I'll call it a win. Jumping right into things, I think the first thing that I'd like to do is just make blockchain make sense. The first analogy that I have is the most in-depth one. This will take a few minutes for me to kind of walk through. It's kind of a story type analogy. The other two are very simple. The Glassbox analogy and the Google Docs analogy take 20, 30 seconds. But the village analogy is really what I've seen create some light bulb moments for people. So the village analogy goes something like this. So picture a village. The village is made up of a number of different families, right? All these families are participating in some sort of trade, right? There's farmers, there's blacksmiths, fishermen, etc. And the economy of the village is not based around a sort of central issued currency. Instead, it's just like a free trade system. So when the farmer needs fish, he's going to trade some of his grain for fish, like to the fisherman. Now, in the real world, things happen, right? Say the harvest doesn't come in. Farmer still needs fish, so he goes to the fisherman and asks if he can still get some fish, and they trust each other. So the fisherman says, yeah, you just hit me back when the harvest comes in, right? And this system works, right? You're basically floating around IOUs in this network of families in this village. And it works for a while, but as the village continues to grow because of its flourishing economy on this like weird credit system, right? People keep moving to the village, people keep having kids, and naturally the village population grows, and it gets harder and harder to keep track of all of the IOUs, who owes who what. So the village puts their heads together and tries to come up with a system like, hey, how do we make this easier for everyone? And the answer is, well, let's hire an accountant. basically. We'll call him the ledger man. And the ledger man's job is to keep track of all of the trades, transactions, everything happening in the village's economy. That'll keep things fair. So they do that. They hire a ledger man, and it works pretty well for a little while, right? It functions as intended, but it doesn't take too long for this sort of linchpin person to start taking advantage of his position, right? So he starts accepting bribes under the table from villagers who want their debt service first. And he starts eventually extorting the villagers for, getting their debts paid back to them. So if you want anything to happen, you got to go through him. So he becomes this linchpin. And you would imagine eventually that system breaks down and the ledger man gets chased out of the village, right, with torches and pitchforks. But, hooray, right? They've liberated themselves and now they're right back to where they started. And it's even more of a mess. And now they need to come up with an even better, like some kind of system that doesn't rely on a third party, right? A trusted third party. So the town elders gather the village together and they're trying to crowdsource this thing, right? And some random anonymous voice from the crowd yells out, well, why don't we just keep our own ledgers? And they're like, yeah, that's actually a pretty good idea. So they institute what they call a smart ledger system. So every family has their own ledger of all of the transactions, trades, everything that's happening in the town. So as they go through their week, they're logging down everything that's going on. And then at a set interval, let's call it once a week, they get together in the town square and they read off the ledger and they talk about anybody who disagrees, if there's any discrepancies, just to reach a consensus, right? So if there are discrepancies or disagreements, they move forward with the most common entry in the ledgers and discard the couple of outliers, right? Now, there needs to be some kind of incentive, right, to get the villagers to want to participate in this system. Otherwise, they could just kind of opt out. So what they do is they implement a sort of competition element to it, right? They pool a small amount of goods from each of the families, a very, very small amount, pool it into kind of a larger prize pool, and then create a competition, say a treasure hunt. So if you meet two requirements, which are you help discover discrepancies and reach consensus from all the ledgers, you then get the opportunity to compete in this treasure hunt. And if you find all of the items first, if you're the winner of this competition, you win the prize pool for the week. So that's how they incentivize the villagers to actually want to participate and keep the town's economy flowing. That's Bitcoin, basically. I mean, it gets a lot more complicated, but that's really the foundation of how the Bitcoin network functions. So if you take that, we'll come back to this slide for the other two, but if you take the families in that analogy and make them computers, tens of thousands of computers all over the world, those are called nodes in the Bitcoin network. The tracking of all of the trades and the IOUs.
Danny, I just want to clarify, it's the blockchain network, not the Bitcoin network, right?
Yes, sorry. Bitcoin is a specific blockchain network,
right?
But yeah, we're kind of getting there. This whole idea of like you're doing work, right? So the village families are working. They're doing physical work to validate the ledger, and then they're working. They're exerting sweat, right, to do the treasure hunt and win. Mm-hmm. It creates what you might call a proof of work consensus, right?
Right. Right.
In the Bitcoin network, that work becomes computer power. You're burning electricity in order to verify the ledger, verify the transactions on each individual computer. So that's called the proof of work consensus mechanism. So you've probably heard the term proof of work before, but that's what it physically means. So like I said, instead of tracking all trades and IOUs, now it's keeping a ledger of all the transactions that are happening on this blockchain network. This says sack rice. I use treasure hunt. I kind of interchange them. Treasure hunt works a little better. The competition is actually a cryptographic math problem. So you have computers that are burning energy to try to solve this problem first, right? They're trying to reach the conclusion before anybody else, and then they win the reward. That prize pool is a block reward or a miner's reward. So all these people that are helping to validate and secure the network and verify all the transactions going on, they have the potential to win this block reward that gets paid out on certain intervals. In the village analogy, I used a week, right? Is that you meet up every week and you reach consensus. In a blockchain network, that can vary, but let's say in the Bitcoin network specifically, that's every 10 minutes. So a single block of transactions is being filled and stamped to the blockchain every single 10 minutes. Something that I didn't hit on was this sort of magical bulletin board. So whoever wins that competition, the treasure hunt plus, they help to validate the ledger. Whoever wins that gets the opportunity, gets the pleasure of stamping their ledger up on the town square bulletin board for everyone to see for all of eternity. All right, it becomes a historical record you can look back to and say, oh yeah, the Jones family paid the Smith family X amount on this date, and it's time stamped. You can go back and look at anything that's ever happened in the entire history of the village's economy. It's a magic bulletin board, right? The analogy breaks down a little bit there. But that element of it is what the public blockchain physically is. So you have this immutable time-stamped record of everything that's ever happened, say on the Bitcoin network, for example, that goes back to its inception. And at any time you can go back and check anything that's ever happened. Everything is totally viewable. It's permissionless. Anyone can go and check out the blockchain or participate. So that's the village analogy. If there are questions on that, I'm happy to take those, but I'm going to go back and offer a couple of shorter analogies that kind of help drive the point home a little bit about how, say, the Bitcoin network and wallets and things like that work. Steve, any questions on the village analogy?
Danny, what comes to mind here is that it bypasses this kind of idea of the money lender or the banker, and it basically has these the advantage to the villagers are that they get to define keep track of all the transactions, and they are bypassing the middleman and designating for themselves someone who can keep track of the transactions.
Right. It's a consensus. Right. So you're not relying on a trusted third party. There's no need to have a sort of central source of truth or a linchpin in the system. Mm-hmm. Instead, it's a distributed network of nodes, or in this case, families. Right. And you can have thousands and thousands of them, and they're all helping. Like anybody can go and become a validator or a miner for the Bitcoin network and help the network function correctly, with the potential for being paid out in Bitcoin. So that's the village analogy. It's specific to, everybody thinks about Bitcoin and cryptocurrencies as just the currency element of it, and we'll get into that as well. But currency is really just sort of the first practical use case of blockchain. So cryptocurrency does not equal blockchain. Cryptocurrency is simply a subset or a use case that blockchain technology can be used for. This village analogy explains how blockchain networks function. It doesn't have to be for money. You can use it for other things too. That's kind of what we'll get at with the real estate industry applications, and as we get into smart contracts. Really quickly, I did want to cover the glass box analogy and the Google Docs analogy. Sure. For the glass box analogy, just picture a bank vault with all these safety deposit boxes, right? Like in this photo here. And instead of like a steel front, though, each box has a glass facade, which allows everyone in the bank to see the contents of each box, right? The contents can all be seen, but they can't be accessed. So the owners of each box get a key that's made exclusively for that specific box. And even though they have a key for it, the box, it doesn't technically belong to them, but they have access to its contents. So kind of, sort of, same. When someone opens a new box or creates a new box, or in this analogy, like a crypto wallet, it's creating a new address on the blockchain. And the private key that they own for that address unlocks this address so they can access the crypto that is stored on it. So that visual of like, okay, I can see all of these different deposit boxes or crypto wallets. anyone can go, it's totally public and viewable. People like to think of or talk about blockchain and Bitcoin specifically being like, oh, it's for criminals and it's private and it's untraceable. And that could not be further from the truth. It's completely open and transparent. You can see every single, anytime there's a quote unquote hack or someone steals money, you can trace that money very easily. It's the entire reason our government is spending billions of dollars to push a central banking digital currency, like a centrally issued sort of stable currency that is digital, because it's so easy to track. So there are private chains out there, like private currencies that are focused on obscuring addresses, but they're pretty small when it comes, like in comparison to the rest of the crypto market. Most of them are public and open and transparent blockchains. The Google Docs analogy just kind of drives home the point of I guess, ease of collaboration, and this sort of time-stamped historical record that is the blockchain. So if you're familiar with Google Docs, like if you use something like Microsoft Word, working on a document requires a ton of back and forth, right? Someone works on it, and then the recipient has to wait for the author to save the file, send the file, you receive it, you make edits or comments or whatever, send it back. They have to it's a very much back and forth kind of motion, right? They're only visible, all of the comments and edits and everything that you're doing are only visible to the person who is working on it presently. And the only way around that is to look over the author's shoulder, whoever's at the computer, and that's probably going to piss some people off, right? But with Google Docs, everyone who the document has been shared with can access the file and collaborate on it in real time and add comments and add edits. So everyone with access can view it. And then when you make comments or suggest changes, everything is saved in the revision history of that document. And it's visible to everyone, and you can't go back and change it. So what's seen and what's entered can't be denied by anyone. And one person can't make a change without everyone else seeing that change. And that's exactly how the blockchain network works as well. Instead of a shared document, it's a shared ledger, right, of all transactions, of all buys and sells and sends, that all involved parties have access to. And any change within it can be verified by anyone on the network. So if you try to go back and alter something in the Bitcoin network, for example, it's physically impossible, because if you try to change something that's already happened in the past, it creates a cascading waterfall of basically of red, right? You'll go back, you'll try to manipulate the blockchain, but every single block of transactions is tied via cryptography immutably to the block before it. And if you change anything in one of those, it cascades on the whole thing. So it's very, very apparent to see or catch or find people that are trying to manipulate something. So that's the Google Docs analogy. Questions, comments before I roll on?
That's great. That's
cool.
Very, very helpful. I love those analogies. It really makes it understandable. Thank you.
Awesome. So those analogies apply to public blockchains. That is distributed, open, immutable blockchains that anyone can use. There are also private blockchains. And that is where, instead of like the villagers being independent entities, you can have things like companies or governments create their own blockchain networks where they control all of the nodes, all of the computers that make the network function. This is more akin to something like, using servers or cloud data warehouses that are managed and operated by one specific company or one specific services provider. Not to say those are bad at all. Private blockchains have their uses, and a lot of them are in the real estate industry, and we'll get to that. But if you're trying to come up with some sort of distributed way to handle, say, for instance, currency like Bitcoin, you don't want a private blockchain, because then one person or one entity controls your monetary supply. Like if the goal is to be distributed, if the goal is to remove trusted third parties, public blockchains are what you want. If you want to just leverage blockchain and kind of use this time-stamped visibility for everyone to see, but control sort of like what is seen and how you want to use it, maybe you build a private blockchain. Maybe it's not the right answer for your application. We don't have to jam everything into blockchain. Like I talk to a lot of startup founders who are like, oh, I want to issue a token and I want to have a blockchain that does this and that. And I'm like, yeah, 9 times out of 10, 9.5 times out of 10, I'm like, you don't need to do that. There's no point in trying to use the Web3 buzzword. It's like adding .com to your name, in the late 90s. It's just trying to capture the hype when in fact, whatever you're trying to do, blockchain isn't going to solve it any better than say something like Web 2 and the current internet economy that we have. Current internet tech can do everything that you want to do. You don't need a blockchain. You don't need a crypto token, but everybody's very, it's been very hypey for the last couple of years. Maybe not right at this moment with everything going on, but I usually try to dissuade people from that. But that's a whole nother conversation. We can move right along. So everything I just described was a public blockchain. I used Bitcoin as the example because it's the most popular proof of work network. It's the largest Bitcoin network out there that is proof of work. There are other consensus mechanisms out there aside from proof of work. The largest example would be Ethereum, which came along 6 years after Bitcoin's inception. And there were tons of crypto projects right after Bitcoin came along in that 6-year period between Bitcoin and Ethereum. But they didn't really do anything super novel. They didn't change anything. There wasn't any like huge upgrades or changes to how blockchain functions or real upgrades that move the needle for the industry. It was mostly just people going, hey, well, I'm going to copy and paste Bitcoin's code and make a couple of little changes, make the block size bigger or increase or decrease the amount of time it takes to close on a block, try to speed up the network, try to do faster transactions, et cetera. But nothing really like life altering, right? Until 2015 when Ethereum came along and introduced the idea of smart contracts. So smart contracts, as defined by the guy who coined the term, Nick Szabo, he describes them like a vending machine. It's really just an algorithmic programmability that you can put on top of the blockchain so that you have if-then statements, right? If X, then Y. He uses the example of a vending machine, which is your if or your input is if you insert money and if you insert or make a snack selection, your other input, your output, your then statement is snack gets dispensed. So if X, then Y. The whole point of that is to automate the whole process of getting a snack, right? You remove the vendor, you're automating the whole sequence. You're not trusting anyone to take your money and give you back money and giving someone access to the till and all that. You're removing the trusted third party or the middleman. And what that does is it increases efficiency, reduces your expenses, and makes the whole thing a little more customer friendly, right? So what smart contracts do is they introduce an element of that programmability to the blockchain. That happened in 2015 with Ethereum for the first time. And that's the reason Ethereum is the second largest blockchain network in the world presently. It was the first one to allow people to build, right? So it becomes this conversation that is more than money. It's not just about like, oh, we're going to buy, send, sell. Like, oh, now things get interesting. Now we can layer these smart contract, these if-then statements basically on top of each other to build pretty cool applications, right? We can do pretty much anything that you would want to do in Web 2 in this distributed environment, in this network of computers all over the world that are helping it run, instead of having a centralized sort of network like the present Web 2 environment we live in. A visual on smart contracts, typically the whole point is that you're removing the third party, the middleman, right? So you typically need a broker in this situation. Let's say you have a buyer and a seller for something like stock, or let's say you want to swap between two different cryptocurrencies. You want to swap your Bitcoin for Ethereum or your Ethereum for something else. In the traditional world, you'd need to have a broker to make that trade happen, right? The broker has to go out, find the buyer, find the seller, create a situation where they're both happy and move the needle forward. And with smart contracts, you can sort of automate away that process, abstract away that process with code. So you're replacing that trust with computer code that runs based on specific parameters. You say, hey, if this thing happens, make sure this thing happens. And you program the computer to do it that way. And then it does it that way. Now, I know what you're thinking. Probably if we have real estate agents and brokers and whatnot on this call, I would think the same. I'm an enterprise sales guy, right? We're all middlemen here. That's what we do. We broker agreements. This what I'm describing here might sound like an existential threat to everyone on this call because we're trusted third parties, right? I don't think that's the case for people like us, and I'm going to explain why. I think this is very much useful and realistic to use for, I don't want to call it like lower ticket services, but things that are less complex, that have less of like the human psychology element tied to them. And by that, I mean, all of us here sell 6 and 7 figure assets, right? Or we create the connection that allows for buyers and sellers to exchange that level of assets, 6 and 7 figures. And when you're dealing with that much money, you can't really simplify it to the point of where, you know, like, oh, smart contract, like this person buys, this person sells, boom, it's done. I just spent $1 million. It's far too complex. It's too nuanced. There's too many factors that go into the sale, the sale and purchase of a home, of real estate investment property, of engineering software, of any kind of, you know, large ticket software. Like there's always going to be a need for people that can create that connection and make it flow more smoothly. Like there's a reason we're not out of a job yet, is what I'm trying to say. But this whole function of a smart contract is really there, I think, personally, to make our lives easier. And we'll get into how that can happen.
Danny, a quick question that we're getting is, what are some examples right now of where this smart contract is taking hold?
So the first good example that kind of popped up with decentralized finance is the idea of an automated broker, right? So if you look at like exchanging, if you want to sell your Apple stock, right? Or if you want to exchange one crypto for another, there needs to be a market made for that. So typically you would need to have a pool of transactions where a broker can go and match one transaction to another. This guy wants to sell at this price. This guy wants to buy at this price. Let's meet in the middle where both people are happy and make that happen. All that happening in the middle via a trusted third party. Well, presently, you have what's called an automated market maker that's made possible by smart contracts. There's a number of different examples. The largest are probably things like Uniswap, SushiSwap, kind of a funny name, but it's the second largest decentralized exchange. So you can go exchange various cryptocurrencies and stable coins. There's also decentralized money lenders, so money market funds, where you create this situation where your pool of funds is automated in such a way that no one has centralized control of it. If I want to go in and I want to swap one coin for another, basically you'll have people on one end that are providing liquidity to the market. People like me, I'll go in and I'll give my crypto basically to this smart contract that is promising a certain amount of return. And then they take my tokens and they create a market for other people that want to swap that token to something else. So you have liquidity providers that are regular people. Like, I don't have to be an accredited investor like you typically would for something like this. This is a financial vehicle that's typically reserved for accredited type folks. But I can go in crypto land, right? And I can provide liquidity and I can earn an interest rate that is exponentially higher than the savings account returns, right? So it unlocks.
That's interesting. So we have one question, but a follow-up question to that. So many of the smart contracts are right now being leveraged primarily for cryptocurrency.
I would say that's correct.
And
yes,
the trading of cryptocurrency. So if I have, just speaking like a dumbbell here, if I have 1,000 Bitcoin, which I know that may be a lot of money, I can put that into the pool where it could be part of the trading mechanism. It's backed by real, it's back, you know, and now it's back. There's something really there. And I'm getting a rate of return for putting that into the system, so to speak. And
that's exactly how it works. Yeah, when you say backed, and that thing means something kind of different in the crypto community. Like if you talk about stable coins, right?
Yeah.
That's another element that I don't know if we want to go too deeply on, but
no. But the one question, I'm sorry, I didn't mean to interrupt you. One question is, would a cash transaction be a smart contract? Could that be?
There are ways that you can do that. So there's something I actually just mentioned, stablecoin.
Right.
A stablecoin is a digital representation, essentially, of a dollar, of a real world currency. So you have things like USDC and DAI, DAI, that are either backed or pegged to the US dollar. So in the case of USDC, for example, that is a cryptocurrency that's always worth $1, and it is backed by real world assets, real world dollars that are in an account somewhere in the world, right? And the reason that stablecoins came around is to like help this whole ecosystem of decentralized finance, of people trying to swap between tokens and borrow and lend and create money markets. If you're trying to do that, if you're trying to borrow funds and use volatile cryptocurrency as your collateral, that's just a recipe for disaster, right? That's kind of sort of what happened with the FTX blow up. It's people that are collateralizing their loans on hyper volatile assets like Bitcoin, like Ethereum, like all cryptocurrencies. They're very volatile. And if you use those to collateralize your loan, you're going to blow up. You're going to have a bad time. Stable coins,
because they go up and down so much that their values change so much that it's all of a sudden,
exactly.
Yeah, I got it.
Even if you're hyper over collateralized, right? I had a friend who took out a crypto loan and over collateralized by like 250%. They still got liquidated because prices are down 85% in the last year.
Yeah.
So, if your asset is worth $50 and you take out a loan against it, that's hyper over. Let's say you have, 200 grand worth of the coin, you take out a 50 grand loan, the price could still relatively easily go down to the point where you still get liquidated when that price hits $7 or whatever it is, right? That happens in crypto because things swing wildly. So the whole point of stable coins, really, at least 2 years ago, was to stabilize that market. So now you can collateralize your crypto loans with an asset that is worth $1 always, right? It is pegged to the US dollar. So there are arguments you can go down the rabbit hole of like, okay, if you dig deep enough in this decentralized finance world, you get down to the base layer, and that base layer is the US dollar that's holding everything up. What's the point? Yeah, I agree with that. If you were to steel man that argument, it's a good argument. Eventually, I think crypto will get to a place where you have a stable sort of crypto that is not backed or not pegged to fiat currency, to US dollar, or to any other sort of centrally issued currency. We don't know what that looks like yet, though. Honestly, there's a lot of sort of competitors in that space, but it doesn't exist yet. It's the realm of conjecture, so I'm not even going to go there.
Great.
But on the topic of smart contracts, where are they actually being used in places other than just cryptocurrency, right? We can move on to the next slide and get into real estate and industry applications. Before we jump into this, were there any other questions, Steve, on blockchain smart contracts? Okay.
No.
Cool. So I threw some examples up on this slide of projects and companies that are involved in the real estate industry that use blockchain for real estate applications, things that exist today, right? So the one that I think that I was the most maybe excited about was a startup called Proppy. And Proppy allows for you to buy and sell real estate using cryptocurrency. It's part of the National Association of Realtors REACH Accelerator program. And they've already processed $4 billion in transactions for consumers and agents from a number of different companies, right? You've got Keller Williams, Redfin, Remax, Realty Austin, Acme. So you're talking a nationwide effort to use blockchain to buy and sell real estate. Recently, I want to say in the last 2 months, Proppy was able to seamlessly transfer ownership of a condo in Tampa Bay, Florida, in 15 minutes, which that just kind of blows my mind. Everything from the appraisal to the offer, it was all done online via the blockchain. And that insane deal velocity, I think, is possible because of the lack of credit and background checks that you have to do in blockchain. You're not required to do a credit check or a background check. That can definitely speed things up for you. They only look at your collateral, right? It's not about the credit in the background. It's about how much collateral do you have. And that's exactly how crypto loans work in all of those situations I just described. Like, you can't take out a loan unless you're over collateralized. So in this case, they were able to transfer ownership seamlessly in 15 minutes because you didn't have to go through all the background and credit check stuff.
Yeah, Danny. So here's a question we have. What is the value currently? What is the value of the blockchain or crypto? Like, how much perceived value is there in that space?
All of crypto, like you're talking. Yeah. So the global market cap is just under $1 trillion.
Okay, so when I think about $1 trillion, I could picture you have $1 trillion under your mattress. Eventually, which I have just under that, but so I'm sleeping on a mountain. Picture eventually someone wants to buy something with it. That's what we have. That we have. There's $1 trillion worth of value now. They don't just want to trade it with each other. They want to go buy real stuff. Cars, real estate, whatever. This is what's happening, So anyway.
Exactly. And I don't think we're quite there yet, Steve, to be perfectly honest. Sure. I think people still perceive crypto as sort of the buy and hold type of investment, which honestly, like a percentage of my portfolio is that. Most of my portfolio is that. I'm a buy and hold kind of guy. I'm a value and a growth guy. And I think that this entire ecosystem is going to continue to grow over time. But honestly, it's the reason I didn't get into Bitcoin back in 2012 when I first came across it, is because I didn't really see any merchant adoption back then. There weren't merchants, stores saying like, hey, we accept Bitcoin. So I was like, what do we need this for? There's no like, if people can't spend it on things, then there's no point. And I think that kind of that mindset slowly melted away as I revisited it 5 years later. And finally came to understand the real use case behind blockchain, right? It's not just about like, oh, merchant adoption, that'll come. And it's currently happening. You've got some of the largest companies in the world that accept Bitcoin as payment at this point. And now we're getting to the point where we're closing, real estate deals with crypto. But getting, I think, the public comfortable with it, because it's still perceived as a very like risky and volatile asset. There's still a lot of stigmas around it that say like, oh, it's for criminals and it's dirty and scary and you could just get hacked and lose all your stuff. Not really. If you do things the right way, like there hasn't been a single like real crypto hack on a crypto exchange in the last, oh man, I don't want to get quoted on this, but something like 4 or 5 years where it wasn't directly attributed to someone at the company losing their credentials, right? Or compromising the system, or just bad business practices like you saw with FTX in the last month or two. It wasn't a hack, right?
Right.
We can get into that in the Q&A.
Yeah, that was just criminal activity.
Yeah. The long and short of it is if you hold your crypto on a wallet that you control and you don't give it to people like FTX, no one can take it. It's just physically impossible. So all that to say, we'll move on with the real estate industry applications, and we can get into all that in the Q&A if people want to. There's other examples like Consortia, which gives certified listings on blockchain. You've got DocuWalk, which is purchased by ShelterZoom. They have a document management platform that allows for offering and accepting real estate offers on the blockchain as well. And then Smart Realty is essentially property purchase, rental agreements, listings, everything automated via smart contracts. And then you have this other category as well that's currently in existence that is fractionalized ownership of real estate property. This is mostly obviously for investment properties, because if you're going to own a piece of a property, you want to earn a return, right? So what happens is a property gets bought and turned into, like, the ownership of that property turns into tokens. So it's legally purchased, It is legally the ownership is transferred into a certain number of quote unquote shares that are represented as tokens, digital currency. And then when you go and buy a number of those tokens, it represents ownership stake in that property. So you can go to websites like Lofty AI, Acreage Way, Parcel. Most of them do the same thing, right? You can go and you can buy. Actually, let me just pull it up and just show you the marketplace. That would be a lot easier. Let's do this. Is my
Yep, we can see you.
Okay, cool. It's a kind of straightforward process or thing, but I just want to give you an idea what that looks like. So for as little as $50 in as little as, minutes, seconds, right after your account's created, you can invest in any number of companies all over the world, or all over the country, rather. I think Lofty at this point is primarily focused in the Midwest, but they do have properties on both coasts and in the South. But they give an IRR, they give a cash on cash return. It's almost like investing as a limited partner in a syndicated deal, right? So I don't personally like to do that because you don't get the pass-through tax benefits. But I think it's good for people who, want to use blockchain, want to use their crypto to buy their ownership in real world assets. And then the building can't be sold unless all of the token holders vote to sell the building. And there's an overwhelming consensus to a certain number, typical kind of setup there. So it's a pretty interesting, like, as from an investor perspective, I'm a real estate investor. This is kind of intriguing to me just because it's actively happening right now. And there's a ton of competitors for Lofty. There's lots of companies out there. All of these that I have listed on that slide, they're all essentially doing the same thing, offering regular people the opportunity to get into fractionalized ownership of investment property.
Danny, one of the questions that we have is, are there realtor commissions, connected with that?
In this case, I do not believe so.
Okay.
I think this is like, these properties are bought up by Lofty, and then they are turned into what's basically it's kind of a public auction.
Yeah.
Right. So there's 30,000 tokens available. These are new listings. Let's find one that's.
Yeah. And Danny, and this would, from a person who's starting out that doesn't have credit, doesn't have money down, doesn't that, this could be a way that you could put investors in your pipeline to say, hey, listen, you're not able to qualify yet to buy the 5 unit for $1.25 million, but you could start here and I'll keep you in the pipeline type of thing, right? There's other ways for you to do. And, it could be a way for you to just help someone get started. And then when they want to go to the next level and own property on their own, you can help them, do that. So.
Exactly. There's a number.
I think our agents can look at this and get a lot of their questions answered as they go, but that's great to have that on our radar.
I think most of the practical use cases for people on this call are going to be with this top section here.
Yep.
Right. So I would dig into property. I think I have a slide so specific resources you can dig into. Proppy actually has a crypto certified agent course where you can learn everything you would want to know about blockchain. I think it's somewhere around 500, just under $500, but you might be able to get it expensed as educational development material, right? I'm going to give you my book. If you want my 160-page book, I'm happy to provide that as well. But I condensed it down into something a little shorter that Steve mentioned. So that's sort of present applications. It's a little thin. Like there are people doing sale and purchase and lease on blockchain, but it's not like overwhelming amount, right? Like, Proppy has processed $4 billion transactions for consumers, but it's still kind of a drop in the bucket, right? People aren't really aware of this yet. And to be perfectly honest, crypto doesn't have a great reputation at this moment in time. So I appreciate everybody even joining this call, because most people
everyone on this call is still ahead of the curve in many ways. But it's burgeoning, it's happening. There's nothing, going to slow it down. It's, because of the way that the foundational concepts, it's here to stay, whether we want it to be or not. So, okay, here we go, Danny. Let's
yeah, and just finishing up with yep, we're almost done here with just potential future applications. This kind of gets into the realm of theoretical, but if we just look
just one second. So
go ahead.
Furqan Muhammad says Lofty charges a 5% list fee whenever it lists a property. Just FYI, I use Lofty AI. They have brokers who work with them. Okay, awesome. Good to see.
Thank you for that.
Thank you.
Getting into the realm of sort of theoretical, but if we just kind of follow the trend, I think we could see all of these things happening. We're already starting to see them. It's just a matter of adoption, right? So real estate applications for the future, you've got title. So recording a digital immutable ownership of a property on blockchain that is instantly verifiable. So you're talking about taking some of these more, I don't want to call them archaic paper processes at the risk of offending Steve or anybody else on this call, but just kind of helping to condense the entire process of purchase and ownership of a home, right? There's something called an NFT that I'm sure everybody's heard that term before. I'm going to quickly explain what that is. It is a non-fungible token. And if you don't know what fungible means, fungible is basically Bitcoin or the US dollar, right? It's $1 is always worth another dollar. You can exchange them. There's exchangeability. One Bitcoin can be exchanged for one Bitcoin. They're worth the same thing. That's fungibility. So if something is non-fungible, it means it's unique. It means there's nothing else like it in the world, right? So non-fungible tokens are digital assets that can't be duplicated, replicated. They're singular and unique. And you could see how that would apply pretty, like a puzzle piece would fit into recording digital ownership of something like real estate. So if you have a token, kind of like we talked about with Lofty and some of these other examples, you can provide tokenized ownership. But instead of fractionalizing it like you do with Lofty, instead of breaking it up into a bunch of different pieces and letting other people buy these tokens that are technically fungible, you have a non-fungible singular token that represents the title, that represents the ownership of that property. And when you transfer that, you transfer ownership. Obviously, there's lots of regulatory stuff you got to work through to even make that legal, right? But that's where I could see things kind of heading. Obviously, the paper process of going through a purchase, anything involving legal, things are going to get, it takes more time, right? So if you can automate those contracts and the enforcement of those contracts, it's going to speed things up, obviously. So if you're working at a real estate law firm, it's something I'd probably be pretty interested in because it's going to provide a better user experience for your customers in the end. Payments, doing universal acceptance instead of, crypto just being a fringe case right now. Some people pay crypto, for real world goods, but I think it's going to get, kind of like Steve mentioned, it's going to get a little bit more common to see that happen in the future. Settling in seconds versus days. Even seeing the Proppy example, right, of transferring ownership in 15 minutes, let alone weeks and months, and then hassle-free lease agreements for renting, right, and paying your lease on a monthly basis in an automated way. We already have some of those things, right? You can sign up for automatic payments, but if you want to do it in this environment, it can be distributed, it can be public, it can be more straightforward. It's an option. And then one that is pretty interesting to me is ID verification. This might piss off some of my libertarian friends, but I think the ID verification side of blockchain can actually be very practical, right? So you can reduce identity fraud by having these digital identifier tokens, right? You have an address that represents you as a person on the blockchain that is non-fungible again. So not really turning yourself into an NFT, but kinda, right? You are a non-fungible, like your identity is a non-fungible thing that you can plug into a transaction and instantly be verified that yes, it's you, all of your credit history, all of your proof of reserves, everything that you have in your identity rolled up into one single thing, almost like a single sign-on for some of these larger purchases, right? There's a number of projects working on proof of reserves where, you can have someone go in and check your bank account to see, hey, this guy, yes, he has the couple 100,000 that he says he does, but it obscures everything else. All the data that you don't want anybody else to see, totally private. And that actually exists in the real world. This technically shouldn't be on the future use case slide. But projects like Chainlink and their Deco and proof of reserve organizations are all offering things like that. And then the easy and seamless sort of know your customer verification as well that ties into that. So this is kind of in the realm of, right, it's mostly theoretical, but just seeing where the industry's been trending, I don't think it's a stretch to imagine something like all of these items could happen in the coming years. Crypto is a very volatile, it's a very cyclical kind of market, right? It's always going to go up and down. I've been through a number of these bear markets. And if you're investing in it, that just means, okay, buy and hold. Whenever you see these dips, it's great buying opportunities. But I like to follow more like the trends of the industry. Like, how much adoption are we getting? How many of these large tech companies, these large, realtor type organizations, government institutions, how many are adopting and investing in blockchain for solutions to their problems? And if you see that trend go up, it's like, all right, I think we're here to stay.
Yeah. And is that trend going up, Danny?
Yeah, undisputably, 100%.
Undisputably going up. So
yeah,
it's kind, it reminds me, I know it's a stupid analogy. It reminds me of, I remember whenever it was, I remember when my oldest daughter, who's now 30, came home and was like, we're texting. I'm like, texting? Who's going to want to ever write like all kinds of words on a phone? I really said that. And now look where we're at, where no one wants to make a phone call anymore and everyone wants to text. And so this is, I believe, for those who are stuck in the mindset of everyone's going to want to use a dollar and this and that, this is happening. This is why I want to bring awareness to this. Danny, there's a question here. It says, with the 3 current sudden deaths of major crypto creators, do you think that will affect the crypto market?
Yeah, we're getting into the
so that's a rabbit hole. That's a
yes,
rabbit hole question.
Yeah.
But maybe we'll wrap this up, and then whoever wants to stay around for the rabbit hole, we'll have your book. They can reach out to you if they want to, dive down it. But thank you for that question.
Yeah, happy to go down the rabbit hole. Let's finish this part up, and then we can put the tinfoil hat on if we want to. I'm all about it.
Yep.
So summarizing what it means for you as an agent, as a, let's say you're real estate law firm, broker, whatever you're doing, theoretically, the whole point of all of this, the whole point of smart contracts is to make your life easier, right? It's to automate processes and make your life and your customer's life have a little less friction. So the end-to-end process of buying and selling real estate is going to get shorter. So in my opinion, agents and people in this community who adapt to this reality sooner, I think they're going to come out ahead, just like Steve sort of alluded to. How do you go about doing that, right? How do you even educate yourself on this stuff? I mentioned the Propi Crypto Certified Agent course. I'm not affiliated with them. I know I talked about Propi a lot on this, but I don't know any of those people. I don't earn anything from them. It was the resource that I came across that they put out a lot of stuff to help people like you. So I would look into that. Like I said, just under $500, but you might be able to get it expensed. Consortia, one of those brands that I also mentioned in the current application slide, they offer certified listing reports. So kind of helping to compress that timeline as well. Not really sure what their fees look like for that. So you're going to have to do your own due diligence there. But if it can help sort of some of the numbers I saw on their website where it cut the days on the market in half for your listings. So could potentially help. And then I'm going to make sure that Steve gets you access to my ebook, which is the shorter one, the 16-pager. It's more of a quick reference guide for value and growth investors. Like I mentioned, doesn't really have anything to do with real estate. But if you end up assisting clients on deals that involve blockchain, right, you're going to want to understand how crypto works, how wallets work. Now that you have a base sort of foundation knowledge in blockchain networks with those analogies, now you can kind of dig into wallets, how those actually function, be the subject matter expert for your clients, for your customers. So I'll make sure you guys get access to that.
Yeah, we have everyone's email address. Someone just asked, how do we get the ebook? We'll get you the ebook. You'll get it in your email. Danny, what I'm thinking about, if I'm a broker on the call, as things get more complex, you become more valuable. And that's something that if there's a level of complexity to this and you have knowledge on it, you're just separating yourself and making yourself more valuable to the community. I don't think a $500,000 purchase will be ever done, generally speaking, with a point and a click and oh my gosh, I'm going to transfer. They're going to always need experts like you. So I don't think, that there's any risk of agents being eliminated, with this, with these technologies. Okay. Well, I just want to say, Danny, thank you very much for just sharing with us this knowledge. I believe our agent population got smarter. We're going to record this, so we'll publish this. And so, but if you want to stay around just for the Q&A, let's begin. So let's talk just a little bit about, Danny, your take on the crypto market, the 3 sudden deaths here of the major crypto creators, and how that you think that'll affect the crypto market. It seems to me like there's just this foundation of technology is going to carry forward, and where we go with the crypto market, temporarily might be affected by the situation, right?
Yeah, and that's the key word there, is temporarily. There's been lots of sort of media breaking things that have happened in crypto right in the last 5 years. They're always temporary, right? This is a blooming new ecosystem. Doesn't feel like it at the moment because we're in the midst of a bear winter, as we like to call it. But everything blows over, man. Like, yeah, there's been some mysterious kind of deaths of people who have created crypto organizations, crypto projects. I don't know if I want to get into the realm of conjecture on that side. Like, we can fall down the governmental rabbit hole and how
right. Bankers not wanting, like, you could see how this is a threat to big set in place financial ecosystems that we've accepted for good or for bad. And so you could see how anyone's creating any of this secondary system or an alternative system as being a threat to that, regardless of who's dying and who's not.
Yeah, there's a lot of people making a lot of money who are incentivized to not let anything change. Mm-hmm. And that's the way of the world. It's the way the world has always worked. But when you think about a decentralized network, that's kind of the beauty of it, right? If the government decides, hey, Bitcoin needs to be shut down, good luck. You can't. Like, you saw it happen in China, right? So China banned crypto, banned Bitcoin. You can't mine Bitcoin anymore. A lot of the hash or the computing power that was being used to secure and validate the Bitcoin network existed in China because it was a cheap sort of location for you to run they're called mining machines. So it's GPUs and ASICs. It's just these computer boxes that are pre-made to solve that cryptographic problem, that competition, so that you have a better chance of earning the block reward. You're turning this into a business basically as a crypto miner. China banned that, right? And within 6 months, you saw 100% of the hash power migrate right over to the US, to Europe, to elsewhere. Like, unless the entire world, like all the governments of the world, get together and ban crypto, ban Bitcoin, like, you can't stop it. You would physically have to go to every single person's house, seize their mining equipment, right? Or like break into their phones and like take their crypto. You can't, it's physically impossible once the network reaches a certain point, and we're well beyond that point now. So in my opinion, it's a futile effort. And if our government, if the US government specifically wants to remain relevant, the only reason we've been relevant over the last 20 years is because we've led the world on tech. Right? We have been the tech lead, and that's where most of the capital has flowed. Obviously, our country's business practices and our debt is just insurmountable, and there's lots of problems with how the economics of the country work. But we've always had that. We've always been tech lead. And this sort of crypto Web3, right? You take the current iteration of the internet, you add this sort of distributed layer on top of it, you get Web3, where instead of it's read only, now it is read, write, own. You can have ownership of your sort of stake of that network. If we don't pursue that as a country and allow that to just bloom like we did with the internet, I don't know. I think we're going to be a little irrelevant over the next 20, you know what I mean? So yeah, it's kind of trending in that direction, just regulatory wise. Who's to say what's going to happen? There's a couple of friends in DC, I think. This whole SBF, FTX situation did not help things because SBF, Sam Bankman-Fried, was the face of crypto in DC, right? He was the one lobbying for, you know, crypto regulatory things that made sense or that were a little less aggressive. But that's a sketcy situation, man, because he's heavily, like his family is super connected in politics in DC. He's one of the largest donors for the Biden administration. There's a reason that he's not being harpooned to death on mass media right now. We'll just put it that way. Like, he essentially got away scot-free with defrauding $10 billion worth of funds from his customers. And people like that, people who are managing centralized platforms like that do people dirty, are terrible for crypto. And I think he set the whole industry back at least a year. This is all just my opinion, first of all.
Yeah. And what I really like about what you wrote, Danny, is to me, it separated all of the kind of hype, conjecture, and kind of that SBF side of it to really the fundamental concept of what's happening and how the fundamentals, regardless of what happens with any of these coins or anything, the fundamentals are here to stay. You know what I mean? No matter how you use your phone for illicit purposes and all that, you're not going to throw away your phone. You know what I mean? You're always going to use it. And this reminds me of that kind of, blockbuster type of technology that is always going to have a place here. And particularly from title insurance, real property transfer and all that, it looks like an obvious thing that is going to be coming into our industry, because there's almost a perfect fit for it from a title perspective, at least in my mind. So anyway,
totally.
All right.
Yeah.
We don't have any more questions. People have asked, are we going to have, we've recorded this. And so we'll send the recording out to everybody. And, Dan, we'll send out Danny's information. If you want to have a conference with Danny and all that, he's a consultant in that regard. If you have things you want to do with crypto, that, that's for you and Danny to talk about. But we just want to say to Danny, thank you for taking the time to craft your presentation for the real estate community. We appreciate you, just the way you've delivered the material in a level-headed way. And we want to thank everyone for being a part of our call. And we're looking forward to our January series, which we'll be announcing soon. So thanks a lot, Danny.
You bet. Thanks for having me, Steve.
Take care. Bye.
You too.